Welcome back. Hope you're having a good morning. Well, to help us out with some fundamental analysis, Siddhartha Khemka, Head Retail Research at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Good morning. I'm sure you have some exciting weekend plans, but for the time being, we want to understand your take on a whole host of stocks. Let's talk about the telecom space. Vodafone Idea as well as Bharti Airtel, they'll be in focus today. There's a Goldman Sachs note that's come out. It's interesting. The target price of around ₹2.50 is what they have on Vodafone Idea. Before we get to the stocks, have you ever seen a target price like this on any stocks?
Yeah, good morning. And yes, weekend plans to welcome Ganpati at home along with a lot of friends. So festive season cheer will be at peak. So festive greetings to everybody on the show. So telecom is an interesting space. I don't think we have ever seen this kind of target price. While some of the arguments in the report definitely holds true and they pose a risk to Vodafone's business. So market share loss is a big risk. Cash flows is something that is a key monitorable. But what we believe is that with the recent fundraise and the consolidation that has happened, the cycle for increasing the prices or the ARPU uptrend cycle has begun, which will be most beneficial for a player like Vodafone. Nonetheless, given the risk, the preferred pick that we have always chosen and which has delivered consistently is Bharti Airtel. If you look at consistently on a quarter-on-quarter basis, record business they have reported it both in the India market as well as some of its global markets. Business has improved a lot. Cash flows have improved. Net debt has declined substantially. And so, as I said, overall, within the telecom space, Bharti Airtel remains a buy for us with a target price of 1650. Vodafone, despite the positives and negatives, currently we have a neutral rating and a target price of 15, which is where the stock is currently hovering around.
Good morning. Great to have you on. So there's so much going on in oil and gas, right? There's a whole green transition. We've seen they've eased out the restrictions for ethanol blending as well. Sugarcane is back in the fray. Then there's so much happening. I mean, in terms of the news flow, Gujarat Gas is the biggest newsmaker, I guess, earlier this week. What do you like in oil and gas? What are you playing right now?
Yeah, good morning, Surbi. So yes, energy is a big subject for India, especially when we are an import-dependent country, both in terms of especially in the fossil fuel, be it crude or coal, and that is where a lot of efforts are going on. We believe the low crude prices are definitely a positive. What we have seen over the last 1.5 to 2 years is, despite a lot of geopolitical issues, crude has stabilized between that $70 to $80 per barrel mark, and that is very positive for not only the oil and gas companies, but also for the India Inc. as a whole, as it keeps the raw material prices in check. We believe some of these OMCs would do well with the crude being stable and both the refining margins as well as the marketing margins are doing well. Within the space, HPCL is something that we like. It is a preferred pick given that most of its capex is done and the impact of that is already started visible in its numbers. So Hindustan Petroleum is the preferred pick within the oil and gas space. Coal India in the mining space is something that we like. We believe volume growth will continue at a growth of around 8% over the next few years. And with the high dependency on, so if you see the growth both in metals as well as in energy, coal would continue to do well. They have taken measures to increase production. It targets production of 838 MT in FY25 with around 15% of e-auctions, which gives a higher margins. So net HPCL within the oil and gas space and Coal India within the mining sector.
Siddharth, I just want to take up this one stock with you. I don't know if it's under your coverage or not. Easy Trip Planners, right? Yesterday, something very, very curious happened because an announcement came in that they will manufacture EV buses. And I mean, this is not a tie-up to sort of ferry customers or travelers from point A to point B. This is EV manufacturing. The market celebrated it because it has the word EV attached to it. But what are your thoughts? I mean, what's your view on the company, the stock otherwise, and then this latest development, which seems a clear diversification from the core business?
Surbi, so we don't have coverage on the stock, but if you look at what the excitement in the street is, there is a lot of potential of growth in the EV segment, and the competition will get intense over the months to come. Setting up an EV manufacturing, you require capex, you require to set up an assembly line, you need technology. So I'm not too sure. Yes, it's a diversification from the core business. Street may have cheered up initially, but
we'll have...
Sorry?
Yeah, please continue, Siddharth. We can hear you.
Yeah. So I think it's a diversification which definitely needs a deeper dig into what the plans are, what kind of investments the company will do. Because so far, what the company was is into the technology side of travel portal, which had done well so far, and we are definitely obviously positive on the overall travel hospitality space. Within the EV space, we have seen how the Ola Electric is still loss making, and the path to profitability is still unclear. But it's a watchful stance as of now on this move.
Okay, all right, Sid. Thanks a lot for joining in and giving us your take. Wishing you a good day ahead. But let's take that.